Hello everyone, welcome back to my YouTube channel, my new issue ACCA classes. So in this video, we will be doing furthermore question from the Kaplan kit of F3 so-called financial accounting. And in my previous video, I have done till question number 115. So in case you have been missed out my previous video, you can still access it from the playlist available on my YouTube channel at free of cost. And if you're watching my video for the first time, do not forget to subscribe my channel and share it among your friends so that they could also have the benefit. Alright, so let's start the today video. The question number is 116 and what the question says, what is a laser account? Okay, so I must say you are familiar with the basic terminology of accounting, right? So let's evaluate the option and try to figure out the correct option. The first option say a ledger account is a record of all transactions that were initially recorded in the bank general ledger account. Basically, the first statement describes the bank ledger, not the general, ledger account. That's why it's incorrect. Okay. Second statement is ledger account is a record of all transactions that affect the statement of profit or loss. Basically, this applies only to the income and expense account, not to all the ledger account. Yeah, exactly. And in ledger account, there is no item that will only affect the P&L, but there are also the certain item that will be shown or represented in the balance sheet, right? Assets, liabilities, equity, right? So B is also incorrect. Moving to the option C. C says the ledger account is a record of all transactions relating to the particular item in accordance with the principle of double entry bookkeeping during an accounting period. So basically, this is what the definition of the ledger account. It will record all the transaction, whether it's related to the PL, balance sheet, cash flow. It will have record of all those transactions, and we will group according to the its similarity. And one more thing that's important in the ledger is that debit should be equal to credit, which is under the principle of double entry bookkeeping system, right? So C is somehow correct. Let's go to the option D. What the D says, a record of all transactions that occur during an accounting period. So this does not specify the ledger account. Basically, to have a ledger account, the first and foremost thing is the double entry bookkeeping system. That debit should be equal to credit, right? And it will include all those transactions. It might be during the accounting period, before accounting period, after accounting period. The ledger will have all those amount included. So C option define exactly the ledger account definition in complete way. So moving to the next question, what the next question is, what is the general ledger? So let's evaluate the option again one by one. Okay, so option A says the general ledger a record of asset and liabilities of the business. So basically, this will only describe some part of the ledger. The general ledger contains not just assets and liability; it also include income, expense, equity, right? So it will cover everything of the financial statement, not only asset and liabilities. That's why it's incorrect. Moving to the option B. B says general ledger is a record of sorry. General ledger is a record of all amount owed to the individual supplier and all amount owed by the individual customer. So this is somehow refers to the account payable ledger and account receivable ledger, right? Which are the sub ledger linked to the general ledger, not the entire general ledger. So this is somehow also incorrect. C says the general ledger contains the statement of profit and loss and the statement of financial position. Again, this is incorrect. Why? Because it's a whole individual account that make up the full financial statement. But the actual financial statement, the profit and loss, financial position are prepared from the balance of this account, not stored in the general ledger itself. Okay, so this is also incorrect. Moving to the option D. D says the general ledger contains all the individual ledger account used by business. Exactly. This is what the definition of the general ledger. It is a central. I mean the we can say that it is a central repository where all financial transactions of the business are recorded. It will include the individual account such as the assets, income, expense, liability, equity. Okay, so each account in the general ledger is updated through the double entry bookkeeping system where every transaction affects at least two accounts. Remember the rule of double entry system that there should be any transaction will have impact on the two account, right? So this is what the definition of the general ledger is. Moving to the next question, what the next question is, question number 118. What is the purpose of a ledger account? Okay, so first option says it enables business to classify, record, summarize transaction in an orderly and inconsistent manner. Exactly. The purpose of ledger account is to provide a systematic way to record each and every transaction as well as classify the transaction according to, or we can say group the transaction of similar nature, and by organizing the transaction in the specific account as like cash, receivable, payables, right? The business can efficiently track its financial activities. Okay, so this will further help a businessman to prepare an accurate or accurate financial statement. So option A seems to be correct, but let's evaluate other option as well. Why it's not correct? Option B says it enables a business to identify value of assets liability at any point of time. This is not correct. Why? Because ledger account contain information on asset and liability, and the purpose of it is very broader. Okay, so focusing on classifying, summarizing all type of transaction, not just to identify asset and liability value, is the purpose. Okay, so this is incorrect. Option C says it enable a business to determine whether a business made a profit or loss during an accounting period. However, later it will help a business to classify and record the transaction. I mean to summarize the transaction, but the purpose of determining profit or loss is actually achieved through the preparation of statement of profit and loss, so-called income statement as well. So, and this will be prepared based on the ledger account. So this is also incorrect. Option D says it enables a business to determine the capital account balance of the proprietor at any point in time. So basically, the purpose of ledger account is not to provide valuation or determine the capital account, right? So it's however capital account is a part of the ledger. Okay, its purpose is not solely to determine this balance. Okay, so but the main purpose of the ledger account is to organize. First of all, to classify, record, and summarize as well as organize the transaction in systematic way, or or we can say in the consistent manner. So option D is also incorrect. Let's move to the question number 119. The 119 says the following account was extracted from the general ledger of the Ali, and you can see here the name is the purchase. So, what is the balance carried down on this ledger account? Debit, credit, delete, which is not applied. Fine. So, if we will total the debit side, we know the left hand side is debit, and the right hand side is credit. So if we talk about the purchase, if purchase will increase, it will be posted on the debit side. If it will be decrease, it will be posted on the credit side. Let's now total the debit side. How much it is? 4700 3387 5471. So this will give a total of 1358. And on the credit side, the total is 1327. So what's the difference between these two? 1327. So this will be the carry forward amount. That is 231. 231. So this will be the carry forward amount of purchase laser. Now the most tricky part where the most of the students do the mistake is that selecting in the debit and credit. So remember the golden rules. If the question is asking to carry forward balance, to have a carry forward balance, just mention the debit and credit where this transaction has been recorded. So now in our case, the carry forward transaction is carry forward balance is recorded on the credit side. That's why we will choose the credit. But if the question has been asked the opening balance, then you need to do the opposite. Remember this golden rule. I must say the most of the students did the mistake at this point while choosing the debit and credit. So now question is asking the carry down balance. So in carry down balance, just choose the debit and credit where the balance has been recorded. In our case, the balance is recorded on the credit side. That's why we will choose the credit. But if the question has asked to opening balance, then in that case you should have to choose opposite one. Okay. Okay, let's move to the next question. 120. The following was extract from the general ledger of Ali, and this is related to the sales account. What is the balance brought down on this ledger account? Now the question has asked brought down balance. Okay, so remember with this term, what I said, we need to do opposite. First, let's calculate the balance. So what is the total? This we know the on the left hand side it's a debit, and on the right hand side it's a credit. So as this is a sales account, if sales will increase, if we are no, they're not talking about the credit sales or whatever. So if sales is increasing, it means it should be posted on the credit side. If it is decreasing, it will be posted on the debit side. So now let's total the credit side. What is the total amount? 18471 plus 4200 plus 5387 plus 7935. This will give the total of 35993. So but on the debit side there is only balance of 854. So what is the difference between these two? So if we will deduct 854, this will give the balance of 35139. So this is the carry forward balance, right? Now we got to know the what's the balance is, right? But the question is asking brought down balance. So in next year, in the current year this is carry forward, but in next year it will be balance brought forward and it will be on the credit side. That's why what I said, if the question is asking to carry down balance, then you have to choose the debit and credit based on the where those balance has been posted. In our case it has been posted on the credit side. That's why we choose credit here. But the now question is asking brought down balance, so of the next year, so you need to do opposite. You got to know the balance and this is on the debit side, so we have to choose credit, not the debit. Okay, so this is a common mistake that many students do. So be careful. Okay, so question number 121. Which accounting entries are required to record good return inward if the original transaction was made on the credit? But before solving this question, be familiar with this term good return inward. So inward means inside the organization. And what is happening inside the organization? Good return means customer is returning the good. So basically this is the sales return. So don't get confused with this terminology. This is sales return. So if the question has given good return outward, then in that case it will be purchase return. So for now, it's a sales return. So what accounting entries are required to record good return inward if the original transaction was made on the credit? So what we originally we have been posted, we have posted debit receivable, right? And on the credit side, we have posted sales. But now customer will not pay because they have returned the goods. So what will be the transaction? First of all, we need to reduce the sales and we will post sales return. So on the debit side, we will have a sales return. So if we will evaluate each of the four options, there is only two options where there is sales return in the debit side. So return inward is also called as sales return. So on now we have to choose whether it will be payable or receivable on the credit side. So as you have earlier posted the receivable, so you now need to reduce this balance because customer is no more going to pay you back. Because why? They have already returned those goods. So we need to reduce receivable, and in order to reduce receivable, we need to post it on the credit side. So that's why option C is correct one. Okay. Okay, so moving ahead, question number 122. Which accounting entries are required to record good return in outward if the original transaction was made on the credit? So this is as same as the question number 21. So I will suggest you guys to try it once. In case still you have a confusion, do let me know. I'm here to assist you. Okay. So let's stop the video today here in. Okay, so we have only few questions remaining, so let's complete it. Okay. Okay, so what the question 123 says? Which of the following is correct narrative for this journal entry? Okay, so they are asking for the narration. Joe prepared the following journal adjustment. So what the Joe has done? Debited payables by 85 and credited discount. So basically this is related to the discount that the Joe has received while purchasing the goods. That's why they are reducing the payables balance by 85 and crediting the discount by 85 as it is the income. So option A says settlement discount allowed relating to the payables. So basically this is not allowed. Basically this has been received, right? So this is incorrect. Trade discount received relating to the payable. So basically this is also not a trade discount. In case of trade discount, you will be received at the time of the purchase. And in the journal they have posted, I mean Joe has posted, this is basically related to the settlement discount. Settlement discount means that at a time of purchase, or suppose you have buy some good on the credit from the supplier. This will applicable in case of the customer buying goods on the credit as well. So your supplier might offer you that if you will pay those amount within 10 days, you will receive a discount of this much amount. So this is called as settlement discount. So this is related to the settlement discount. So in that case, option B and D will be out of the four option, and A already I have been rejected. This is not correct. Why? Because they said discount allowed. This is not discount allowed. This is the discount received. So that's why option C is suitable option. Okay. Okay. Question number 124. Andy started a taxi business by transferring the car value at 5,000 into the business. What accounting entries are required to record the transfer of the car into the business? Okay. So now car has been transferred into the business, and what is a car? Car is an asset, and if the car has been increased, means asset has been increased. So increase in asset means it should be posted on the debit side. So if we will look the four option, except A, the rest of the three option have motor vehicle on the debit side. So option A is already out. Now, this is not related to the drawing. Drawing means you are taking money out of the business. Here, Andy has transferred its own taxi, card to the business. So option B is also out. So as there has no transaction that has been paid out to the, there's no money transferred through the bank. The Andy has simply transferred its card to the business. So option D is also out. So option C is only the correct option. So basically for the knowledge level, it's very good to know how to eliminate the option. Even though you don't know the answer, if you will try to solve the question logical basis or try to eliminate the option, you will really, by the end, you will get the right answer. So it's very important. Question number 125. Which of the following is correct journal entry to write off an irrecoverable debt? So irrecoverable debt means suppose I am selling the goods to my customer on the credit, and the initial entry that I have been posted is debit receivable, credit sales. So, but if customer gone bankrupt or they are not able to pay back those money, in that case, those amount is irrecoverable debt. So, first of all, we need to reduce receivable balance. Okay, so and reducing receivable means it should be posted on the credit side. Right. Why? Because if because the increase in receivable means it should be posted on the debit side. So now we have to reduce receivable balance. That's why it should be posted on the credit side. So if we will look into each of the four options, only D is having the receivable balance on the credit side. So that's why rest of the three option has been eliminated. Right. And on the debit side, it will be irrecoverable debt, which will be shown as the expense in the P&L. Okay, so this is the way you should try, or you should adopt while solving the question. It will really help you to eliminate the option and get to and figure out which one option is correct. So I hope guys this video are very useful to you, and in next video we will be doing recording transaction event related to the sales purchase, sales tax and discount. So stay tuned with my channel. For that you need to subscribe my channel and hit the bell icon so that you will get notified for each of my video very soon. So thank you so much guys for watching my video and have a good day. Bye.